Good evening, everyone. This is John Locke from Locke in Your Success, and this is the Locke in Your Success Trading Market Update for October 27th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not giving any specific trade recommendations. Also, any trades and or results covered in this presentation may or may not be live trades. In the event they're computer simulated, we do the best we can to make sure they're as accurately represented as possible. And last but not least, make sure that you understand that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And make sure you come on over and visit our trading blog if you happen to be watching this on YouTube or SMB at lockinyoursuccess.com. Okay, a little bit of an update here. We have our new website that should be rolling out sometime in November. We're just about done with it, and I'm hoping that we can get it going for then. At that same time, we will be doing or switching this format to Monday mornings in a webinar format. So just keep in touch with that, and if you want to be updated with that, you can come on over and join our mailing list, and that way you can get your invitations to join the webinar. All right, let's take a look at the markets. If we take a look at the Russell, we had yet another up week. It wasn't a lot up, but it was definitely up. If we take a look at our weeklies, one interesting to note that we have been closing higher every week for the last 8 weeks. And every week for the last 6 weeks, we've set a new record high in the Russell, which is quite a feat. We don't normally get 8 straight weeks up. This here was 7. If you go back through history, weeks-wise, it's not very common. So, although we are bullish in the markets, wouldn't be surprised to see us down by the end of the week. Very likely, we're going to tag the top side of this trend line at 1140 this week. We're now at 1118. We were slightly higher intraday. Only 22 points to 1140. May even push a little higher towards 1150. But once we hit this top of this trend line, I would expect us to start pulling back, possibly sideways for a little while, but at least back in range between our 1140 and maybe 1000 for a while before we come down and tag a trend line. So that's more or less what I'm thinking here. And this is going to kind of line up with what's going on with the Dow. If we switch over to the daily here, we have our resistance at the Dow right around 15.7. And we're probably going to try and push up into that area. We are about 130 points from there, and when the RUT goes 130, usually the Russell goes around 20 or so. So that will put us up at 1140 for the Russell. Makes perfect sense. The NDX is simply just going to probably push higher. We do have the earnings stuff going on this week, and we will be affected by that. But if the Russell and the Dow push higher, the NASDAQ probably will as well. And if we come back to the SPX, a 30-point or 20-point plus move in the Russell is going to put the SPX up into the range of around 1780 to 1790. So in general, we continue to be bullish in the markets. The futures are up as of right now. We'll see if that holds overnight and how we open in the morning. But I wouldn't be surprised, certainly at least to see a continued up move earlier in the week. If we do tag those levels, especially if we blow off hard to those levels, very good chance of at least a small reversal at that point, and for the market to start to come down a little bit. In short, we continue to be bullish, although short term we are looking for a pullback. So let's take a look at our positions here. Since we're on the November ROCK trade, we'll take a look at that first. What happened here is on the 22nd, back on Tuesday, we bought 3 of these 1130 butterflies. Then on Friday, we continued to buy 1130s, and then we started scaling into 2 of our 1150s as the market continued up. So this here is our current position. We're fully scaled in 2/3 and partially scaled in to our last third. If we do get a creep to the upside, then that shouldn't be a problem for this, especially if we top around 1140. Should make a fairly good month for us as long as the pullback isn't too hard and too violent. If we take a look at our November V trade, this trade is up 28.66. If we take a look at our graph, this is what we're looking like here. If we continue to grind up, again, that shouldn't be a problem. A violent move up here to 1140 we may have a drawdown if it happens in one day because we don't typically adjust this intraday. And of course, if we fall back here, we'll start taking the straddle out. There was one adjustment to this during the week. On Tuesday, we bought back another 1150 call to get our delta back under control, but we haven't had to do anything the rest of the week. We were sitting Friday afternoon at minus 72 delta, which is perfectly fine. If we shoot out to our November M3 that we're covering, this trade got one adjustment this week. It was on the 25th, which was Friday. All I did, our delta was getting a little high. I bought 5 1090 calls, sold 5 1100 calls, and this is the current position. If the market does continue to go higher, or we sit here and our delta increases, we'll probably put a little bit more vertical into this. But as of right now, this is doing fine. We're minus 44 delta. We're up of $500 or $600. We're relatively flat here. So all is well with the November M3. If we take a look at our November Bearish Butterfly, this is currently positioned with 7 1090 butterflies, 10 1100 butterflies, and 10 1130 butterflies. I did have an execution error somewhere, not sure what I did, but I ended up with all my longs way down here at 1040. When I added these butterflies, I must have done the broken wing and put the long strikes all the way down at 1040. Very unusual, and this is just an error. I should have 10 of these, only 7 here, and 10 up here at 1160. As we roll out of these, if the market goes up, I'll correct it. But until then, or if I need the capital or something like that, I know we're overcapitalized and we could fix that by rolling this up. But as of right now, this is the position here, and I just chose not to try and move these. So here's what we look like. If we look at our T-log, all I did this week is on the 24th, I started scaling out of our 1090s. And these 2 puts here, I bought back because, again, this was part of an execution error earlier in the week. I had 2 extra short puts here. So if I just shoot back to Monday, this was our position. You see I have our extra, our puts here in the wrong place for this butterfly, for this 1110 butterfly. I made an adjustment on the 24th where I wanted to pull 6 butterflies off, but I ended up, and I'm not even sure how this happened, but I ended up only buying back 4 of the 1090 puts and selling 3 of each of the 1140s and the 1040s. So if you come to the end of the day on the 24th, let's go to 1600, I looked like this, where it had 7 longs and 16 shorts. I should have only had 14 there. So I didn't really realize at the point that I did that, and I just fixed it the next day. So when we come here, I noticed it at 10:40 in the morning on Friday. I just came back and I bought 2 of these puts back. So if we come back to where we were before, here is how the current position sits. Hopefully there will be no more execution errors in this position. But hey, it's one of the things that happens when you're trading, especially if you're trading a lot of positions and you're short on time, which I have been for the last week or so. So we close the week at about minus 215 delta, which is about perfect. We are going into expiration guidelines here, and we're currently down about $1,800. So as long as we don't get any big market moves, this should recover fairly quickly. Remember, we were down 5,000 or 6,000, and now we're closing in on break even. So all is looking good here. And let's see what we have on for other positions. I did go into the December M3 trade. I'm sorry, not the December M3 trade. I did go into the December Bearish Butterfly on Friday as scheduled in the morning, and got this order here with the 1100 short puts. If we take a look at our analyzed graph, this is basically how the trade ended the day, or at least at 3:30. It's just sitting here at about break even, which is to be expected since we just entered. So our last position here is the December V Condor, which I believe is slightly underwater here. No, it's actually slightly positive as of 3:30. Not a whole lot's gone on. We put this on and the market's more or less just kind of sat here or just creeped up a very little bit. So this position is just starting out and looks good so far. All right, well, that's what we have for the markets. We are expecting a continued move up to the 1140 to 1150 area, and then for the market to back off. Possibility it doesn't get there and backs off now. We are extremely overextended, like I said, 8 straight weeks of gains, but I would expect a little bit further push before we come down. And as far as our positions, everything looks really good. It doesn't look like anything's really close to being closed. So that's what we have. I'll update you with any changes next week. Thank you and good night.